In the first half, we heard the policy advocacy, and I'm going to present an actual adoption or adaptation of the advocacies made in the first half. Well, this is a menu. We're going to look at one by one. This is a perfect setting, large numbers, and we have 120 million farm holdings in the country. 80% own less than 2 hectares, and as a matter of fact, 62% of all farmers in the country own less than 0.4 hectares. That's just about 1 acre. And we have 145 million hectares of cropped area. 50% under cereals and millets, mostly grown under rain-fed conditions. Almost 70% population sustained through agriculture. And quite a huge agriculture GDP, $285 billion US as FAO statistics 2010. Well, again, we call Indian agriculture gamble with monsoon. About 75% of the total rainfall is received over 4 months from June to September, what we call the Indian summer monsoon or the southwest monsoon. And we have wide variability. There are regions which receive annually about just 10 centimeters, and there are other areas which receive 1,000 centimeters. We also have a situation where a same area under flood at one point of time and drought another point, and both drought and flood at the same time in different parts. Roughly 1/3 of the country is prone to drought, and about 1/6 of the country prone to floods. I think this is a perfect setting for talking about risk mitigation and particularly the agriculture insurance. Well, I don't want to go into the evaluation process, but if some of you are thinking that the index insurance, particularly the weather index insurance, is a recent phenomenon, just want to update you that is actually a 100-year-old concept. Started in the year 1912 in India by one J.S. Chakravarti, who first spoke about rainfall insurance, and he published a book in 1920 called Agriculture Insurance, a Practical Scheme for Indian Conditions. And that's what we are all now talking about as a solution to the developing and the underdeveloped countries. Well, we basically specializing in index insurance. Unlike the developed countries and other countries where we have a large farm sizes where they're doing indemnity-based or traditional insurances, we have a huge problem to start that kind of program. We've just already looked at the numbers. We have 120 million farmers, very small farm holding size, lack of historical data at the farm level, and remoteness of the villages and the farm holdings, and the low value output, and the effort required to collect small amount of premium from a large number of farmers. All that makes it very clear that the traditional crop insurance is going to not work in India. So that's how we looked at the index insurance as a perfect platform to use this as a risk mitigation tool in agriculture. We have many different versions. We had the first version of area index insurance in 1979. Based on the success, we had the version 2 rolled out in 1985. And we had a third version, this one, which you're seeing on your screen, is a third version National Agriculture Insurance Scheme. This is a countrywide program, which is basically an area approach where agroclimatically homogeneous areas have been demarcated, and we set a specific guarantee yield for that area, and if the current yield based on general crop estimation service is far short of that yield, then all the farmers, insured farmers in that area gets as a compensation. This is basically linked to the credit, compulsory for the borrowing farmers. Well, I'm going to show you how actually it's going to work. This is an example we prepared in the year 2011. So the typical program for sorghum, we take 5 years average yield to set the threshold yield. So depending upon whether the crop and the area is low risk or medium high risk, the coverage levels could be 90% of the average of 5 years, or 80 or 60. So just presented here all the 3 different levels. So we take the green shaded portion. The 5 years average, for example, is coming 895 kilograms. And if the current yield is 650 kilograms, then of course we are talking about a situation where high risk, where only we guarantee 60% of 895, that is 537 kilograms. Current yield being 650 kilograms, the farmers in that area gets no compensation. But the same situation happens in a medium risk area. As you can see, they get about 10% of the sum insured of the compensation, and in a low risk, they can get about almost 24% of the compensation. Then, of course, there are some challenges with the area land insurance, particularly since it's linked to the yield estimation. So there's a delay in reporting the yields, almost 4 to 6 months in getting the harvested details. So farmers tend to face this problem of delayed settlement of claims, and also the basis risk. Typically, we have a larger unit, so sometimes the area averages may not represent the experience of many of the farmers in that area. So therefore, in 2007, as a substitute, as a pilot, started a weather index program. In 2003, started in the country, but 2007, the government of India came forward to support this program. This covers a great majority of the crops already covered under the yield index program, plus certain perennial crops like fruit crops are covered. Risk-based premiums are charged, and there is a subsidy fixed by the government. The difference in the actual rate and the rate paid by the farmer is subsidized, shared by the federal and the provincial governments on 50-50 basis. So we have a variety of indices developed. We have started with a basic index, and we are actually now using crop growth simulation models. We use InfoCrop for the winter crops, and we're using DESAT models for the Kharif and the monsoon crops. And we try to see that the product design is reasonably good. And we are also doing some proxy indices to capture the disease and pest attack. So a simple product looks like this. For example, have a groundnut, a peanut, typically grown from June to October, is divided into different phenophases. And each phenophase, we guarantee certain critical moisture requirement. If the actual rainfall is below this, then all the farmers who are insured and reference to a particular weather station gets compensation. And we're going to look at the numbers later, exactly how all this. Then in the year 2010, we had a washing forward of the yield index insurance. As I mentioned before that, there are certain pain points with the earlier version of yield index, the delay on the basis risk, and also we take preceding 5 years average. If the 2 or 3 years happen to be bad years, then the average tends to get lower, so not attractive to the farmers. So we've introduced a program which actually tried to sort of overcome some of these, like providing prevented sowing, post-harvest benefits, and also on-account payment up to 25% of the compensation during the season if the season happens to be bad. Let me just give you the same slide what you've seen earlier under the new program. So this takes a 7 years average, and what it does is up to 2 calamity years can be removed while collecting the average. So the average actually improved from 825 kilograms to 1,035. We have taken out 2 bad years. And the same current yield, you can see how the compensation could be higher under the new program. This is being tried out in 50 districts in the country. And now these are the numbers, quite huge numbers. Last year, we insured almost 25% of all farm holdings. Roughly 30 million farmers are covered under this program, covering 40 million hectares of the cropped area, insured value of $12.32 billion US. And there's some program which is on administered premium regime, there's some actuarial, $656 million US premium, which roughly corresponds to about $1.1 billion US premium. That's huge numbers, and we are using a lot of new technologies to take it, and the idea of the government is to double this number by end of our 12th five-year plan, that is 2017. Well, before we actually come to the last few slides, I just want to give you the kind of the architecture of the program which the government of India conceived. First of all, we have to get a critical mass of the numbers. We are all talking the scalability. Some of the programs started in smaller countries, not actually growing. So therefore, India I think rightly started with linking this to the credit. And also it's mandatory to the borrowing farmers, and the bank finances the premium of the borrowing farmer, though they had to repay end of the season along with the loan amount, but upfront the farmers need not pay the premium. It's paid by the bankers. The insurance covers just the production cost as a safety net, and insurance works as a collateral to the banks, and they're very happy to do this insurance that reduces our distribution cost. In fact, banks work as a distribution points To an extent, our distribution cost, our administrative cost of running the program, just about 1% of the total premiums. So we collect. And the entire yield process is being done by a general crop estimation surveys of the government. Right now, about 5 million crop cutting experiments are done to estimate the yields. And they are done single series, meaning to say that it's the same set of data which comes to the insurance and goes to the government for policy decisions. This is to make sure that there's no underreporting of the yields for the sake of insurance. And we have both public and private sector weather station networks. Roughly, we have about 6,000 weather stations, but then I think we need about 30,000. We are working towards that. And the private sector players involved, you enjoy the same level of support as we government, and about 2/3 of the cost of the program is paid by the government. Now, of course, it looks pretty rosy and very sweet, but then we do have some challenges, some pain points. The one problem is the basis risk, because we have a variety of agroclimatic conditions. So having homogeneous units is very difficult, though right now for major crops, we moved down to a cluster of villages so that the average is more representative of those cluster of villages. That's how we need 5 million, and we are likely to go about 10 million crop cutting experiments to reach a village level. Issues of financial literacy, because the farmers still think it's like a life insurance, so having paid the premium, they have a right to get back something, which doesn't happen with any of this. So therefore, that's one issue we're working on, awareness. And Government of India have lots of other subsidy programs like fertilizer subsidy and electricity and irrigation. So sometimes crop insurance tend to compete with these subsidies, and also sometimes that leads to some unrealistic expectations. Of course, there is a complexity of products when you're designing for small farmers, illiterate farmers. Some very sophisticated programs will be very difficult to communicate to the farmers. Then we also have problems with the climate change and the yield estimation process. Some of the solutions we are looking at right now, the last two slides. One is a yield audit system we have developed. We use GPS-enabled cell phones, where the primary worker who's doing the crop cutting yield estimation, actually he records the whole process or the important activities, so that the data, the yield estimation is done accurately, it's not underreported, and at the same time, to expedite settlement process, the data on near real-time basis gets back into our server. So this is one process we have started on a pilot basis. Then we have teamed up with the India Meteorological Department, because we have private sector weather data providers, to bring in a standardization in terms of exposure conditions for setting up weather stations and the security and the maintenance. So that's another thing. And the Government of India is now thinking of setting up a technical support unit to benchmark all the products, because now the private sector players are also involved, so that farmers don't have to make much decision. It's the government, a technical support unit, which can actually help the farmers to understand the products. The financial literacy. Then we also have microinsurance agents coming to distribute the products at the local level. Now we are actually, 6 months from now, we might be up with our online portal, where we going to use 100,000 common service centers in the country to actually provide this online service to the farmers using the portal. And of course, my last slide this is. We are also investing and doing a lot of research. One is basically index doesn't work for localized calamities. So we have started for high value crops like hailstorm risk and flooding. For apples and grapes, we started an index where a part of the risk is paid on the basis of the index and part of the risk on the basis of a traditional on-farm assessment. Now we're also actually trying to bring the best of both the yield and the weather index. We're now trying to encourage the government to promote the double trigger or the multi-trigger products. Now, very recently, in order to encourage the non-borrowing farmers to buy insurance year after year, not when they see, it's going to be bad, we're going to provide an incentive to keep aside a small amount of premium as a bonus, as a loyalty bonus. A farmer who buys insurance continuously for 5 or 6 years, he can get back the bonus plus whatever payouts. And also, we are using already the terrestrial observation and prediction system based technology, which generates historical yield data at the village level. In one state, we've just generated 42,000 village grids of last 15 years. This is to reduce the basis risk in weather index insurance. Then, of course, in yield index insurance, we are using satellite imagery to dispense with the manual yield estimation process. We have just teamed up with the International Rice Research Institute, where we're going to use RISA 2000 model, crop model, plus we're going to use satellite imagery coming from SAR map to estimate the yields at the village level, so that we have accurate yields as well as a process where we get the yields quickly of the damage so that we can actually expedite the claim settlement process. So these are some of the things we're doing, and I think it's quite interesting to me. I guess it's going to be something interesting, a good takeaway for all of you or those who wanted to really do something on it. Thank you.
I